Hello and welcome to Car Dealer Live. I'm James Bagger. I'm the founder of Car Dealer Magazine, and today we're talking used cars with Ian Plummer, who is the commercial director of Auto Trader. Good afternoon, Ian.
Good afternoon.
Nice to see you. Thanks for joining us. Now, used cars pretty topical at the moment. I know they're always topical for you guys especially. But let's start with what we think is going to happen in quarter four. We covered this quite extensively on the website last week. I know you provided a comment for us. Thank you for that. But I don't think we could use all of it. So it'd be good to go over some of the detail that you mentioned. What is Auto Trader thinking is going to happen to used cars in the last quarter of this year?
To used cars, well, I think the volumes still look very positive. I think our view on that is pretty optimistic because the levels of demand we're still seeing right now are significantly up on prior year. And this time last year, I don't think anybody was particularly concerned about volumes. We would always have liked more. But if we're typically maintaining a sort of 20% growth level in terms of visits and visitors compared to prior year on Auto Trader, which is a bellwether, I think, for the health of the market generally, then I think we can be optimistic that even if that drops off to a degree, it's still looking very optimistic. And I think the other vital factor is the point around valuations and whether the values will remain as strong as they are right now. We saw price growth on like-for-like cars of 7.6% in our data for last month of September. We aren't expecting that to be dropping off a cliff just now. Things could soften again, just like the demand, but they've got some way to go before they become really anything like the problem that we saw in prior times, like the financial crisis of about 10 years ago. So all told, I think we're looking forward quite optimistically, and the data is really telling the story of a healthy Q4.
We have seen record prices this year, Ian, haven't we? I mean, we've been reporting on it month on month, and it just seems to just keep on rising. And I suppose there's a huge number of factors there, isn't there? I mean, there's been a lot of demand for used cars, increased by people avoiding public transport, not going on holiday and treating themselves. Supply's been restricted as less new cars have been sold, and part exchanges, etc., coming into the market have caused issues. But what everybody wants to know now is that demand going to continue? Because a lot of people have been talking about pent-up demand. I spoke to Dash Gupta this morning from Marshall Motor Group. He mentioned he's released an amazing set of results, a lot due to pent-up demand. What are your thoughts on that at Auto Trader? Do you think there is pent-up demand still there, or is it petering out?
Well, as I touched on a minute ago, I think pent-up demand was definitely a theme, wasn't it, when we came out of lockdown? But I would bet quite a lot of money that Dash had fantastic results, as you said, and any other retailer out there, most of whom equally have had some great results in the last few months, that if they would have been offered the kind of performance that they've seen over the last few months and not just over a few weeks of pent-up demand, they've been offered that back in late May or early June, I think they'd have snapped your hand off. I think everybody has been surprised by the extent and the sustainability, if you like, of the levels of demand we've been seeing. But they don't look like they're dropping off just yet. They're maintaining very strong levels. And as I said, even if they drop from where they are today, with demand levels, audience levels, and so on our site, up to up in the 20% increases on prior year, there's a long way to go before they fall below last year. And again, that isn't such a bad scenario. So it does look still optimistic as we're heading into Q4 now.
I mean, interestingly, you guys see demand before the dealers do. Those customers are out there searching your platform for the cars that they eventually end up in the dealerships. So at the moment, you're not seeing any tail off in that sort of demand. And what exactly are they looking for?
Well, consumers are looking for right across the board. You can see, and I'm sure you've heard the sort of the stories around a peak in searches for cheaper cars and older cars, often the same thing, not always. There has been a growth of prices, considerable growth of prices in that sort of sub £10,000 bracket that we've often talked about in the industry recently. That is, sorry, I beg your pardon, that is particularly down to not just high demand. Yes, there's high demand there, but actually more a lack of supply. So the level of demand increases you're seeing on those cheaper cars is no different to what you're seeing on many other segments of vehicles in sort of slightly higher price brackets. But the significant different factor is that the availability of cars of that age bracket is lower. We produced fewer cars in that time period. Back 10 years ago, we were sort of exiting the great financial crisis. The new car market was sub 2 million cars. So average that out over the last few years, that's probably 500,000 fewer cars for a period of 2 or 3 years at that time. And clearly we're scrapping a few of those cars. So there are buckets there of real optimism of people thinking, well, I've got to go into the older cars. And for many, that is a good strategy. Many franchise retailers have kept rather more of their older part exchanges that they would have previously sort of passed on because their supply channels have been quite tight. And there has been an opportunity in older cars, but equally, I'd say that the opportunity has been there across the board. Demand quite significantly has been strong across virtually all segments.
Yeah, and interestingly, a large part of what's driving this is people who have remained in work are going out and treating themselves, aren't they? And you'd think the fact that they can't go on holiday, they can't have their winter ski trips, they can't go away over the Christmas period, they won't be able to spend as much cash, would lead us to think that people will continue to buy used cars. Is that something that Auto Trader think too?
I think there are lots of reasons to be optimistic, and I've touched on it a couple of times already. Clearly, no one can deny there are significant macro factors ahead of us that could give very strong headwinds. There could be a second significant COVID outbreak leading to lockdowns and so on, which means that all predictions are irrelevant at that point. We maybe go back into a sort of paused market. The numbers of people going into furlough, all of those things, there are factors out there. Brexit could lead to significant impacts. But beyond that, I think we see sort of 7 or 8 really strong factors that plead for a more optimistic view. So you've touched on a few already. There is definitely an increased desire for personal space. Cars are a personal space. We see around 15% of people who are actually on Auto Trader who respond to our survey saying that they're actually actively in the market specifically in order to buy a car, specifically to avoid public transport. There's a whole new bucket of buyers that are out there. Numbers of cars per head are growing. More people are actually driving these days. Driving license applications are up. Driving test requests and driving lesson requests are up. People see cars as a significant sort of form of freedom still, and that personal space. And we're seeing people responding to surveys telling us that roughly 30% of them see cars as more important now than they did pre-lockdown. So it is a real reflection of growing appetite, but that's reflected equally in ability to pay. Household finances are actually healthier for many people, clearly not for everybody. We don't deny the difficult issues that many households are facing. But many households have actually not been able to spend, as you said. They've paid off some debt. Finance equally is in a really strong position for the industry. We finance most of our cars, new and used, and finance rates are extremely low. We're even talking about making negative interest rates, so God knows what that will do to a 0% APR. We're driving our cars again. Consumer confidence levels are back above 100, despite all the doom and gloom. And affordability, when we measure that on our site, we're seeing that consumer affordability, as we asked the question, do you believe that your affordability is better or worse than prior times? And actually, when we measure that month on month, we're looking at a very stable number now of around 8.5 out of 10 of people saying that they believe their affordability is very strong. That compares to something like 7.9 at the end of last year, well before COVID hit. So all of that really, if you look at some of the key macro factors out there, it gives us a good level of confidence that there are consumers out there looking to buy both new and used cars right now. And retailers should really drive all the opportunities they see to capitalize on that chance right now.
I know we're focused pretty much on used cars, but I mean, it is a massive talking point at the moment. But I'd like to talk a little bit about new as well. We're seeing a mixed picture from new. SMMT are reporting one thing. Dealers, on the other hand, are reporting really positive things. What's Auto Trader's take on what's happening out there in the new market?
I think overall the new car market performed very well in the last month. If you look at the UK's sort of curve of recovery, we had lots of conversations in the lockdown period or just exiting lockdown about what our curve would look like. Would it be a V or U? I think somebody even came up with the expression of a bathtub. It would be a long sort of slow period of decline and then maybe an upturn after a while. But we have actually seen quite a good V. So in September, although last September clearly wasn't the best September ever, WLTP impacted things, to be virtually on par, retail was 1% behind last year's September number. I think that's a fantastically strong result. And as you mentioned, many retailers reported some really strong numbers in September and prior months, I'd say. And that reflects probably their ability to have hit their targets naturally. I think what is quite obvious in the numbers in September is that tracking through the month probably showed, and our data definitely showed, that natural retail footfall was tracking extremely positively. And what actually meant that the market finished ever so slightly below last year was that there wasn't quite the same last minute push to close the month, with all the excess activity that goes on that creates the overheating that causes damage to retailers' balance sheets, profitability, to brands, residual values, and so on. So actually not seeing that kind of excessive push activity is clearly a good thing, even though the percentages don't look quite so flattering at the end of the day.
And in just how healthy do you think the market is out there overall at the moment, and how long do you think that's going to continue? A bit of a $1 million question for you there.
Well, I think the market is clearly showing great signs of health. You saw Dash Gupta's fantastic results that you touched on earlier released today to the markets. Robert Forrester of Virtue released some similarly strong, extremely strong results just a week or so ago. I saw Motorpoint talking about how well they were delivering on the new opportunities of sort of creating a more digital retail journey for consumers. That's clearly having great results just now. So from a retailer point of view, I think many have recorded great results through June all the way through to September. And I'm not seeing signs of very strong sort of slowdowns in any of the data that we're looking at. And from most retailer feedback and brand feedback, it still seems like forward order take is pretty strong on both new and used. So I think the outlook remains, let's say, cautiously optimistic, but with I think a hint of positivity in what we do and how we go about things. There's definitely still an ability to attract more consumers into the market that are seeing, as we've touched on, good reasons to go back and buy a car. And we've talked about this term revenge buying. There's the people buying to avoid public transport. And there are clearly people just on the cycle also of finance, which is a huge strength of the UK car industry. By financing so many cars, we create an ongoing cycle of opportunity to keep on renewing consumers. And that, I think, fundamentally puts us in a strong place.
Ian, thank you very much for that. A fantastic insight into what's happening in the used and new market. I really appreciate your time today. Thank you.
Thank you.
Great stuff. So thanks ever so much to Ian there from Auto Trader. For more videos like this one, log on to cardealermagazine.co.uk. You can click on the live tab at the top of the page for more videos, or the used car tab for more used car information. Thanks ever so much for joining me. I'll see you next time. Goodbye.